Welcome back to Your Average Investor. Today we're going to be talking about the AMC and Gamestop news again and discussing if now is the time to buy. I know we've done this video just a few days ago, but with the current blast of power given to AMC, maybe riding on the coattails of GameStop, maybe riding on some of its own short squeeze potential, it's relevant to talk about again because while nothing has really changed fundamentally about AMC, everything has changed from a perspective of what the heck is going on in the market. In addition to that, we're going to talk about some ways, if you are an owner of AMC shares, how you can hedge against a potential downturn storm from short sellers. I'll show you some examples, and we're going to show all the crazy trading halts that have happened today, so buckle up, we're going in for a ride. Now, if you haven't already, please hit that subscribe button. Take a look at AMC right over here. Interesting trading levels of note, some that we talked about last night. Right here, 6.74 or $7 a share right about. Then this right here around just over $8 a share. These are two important levels that historically, let me show you down here, acted as some sort of basis for AMC, where if the price can push above and stay above, it traps a lot of potential short sellers. Anyone, again, that's shorted in this area here, they're looking nervous because look at this, AMC is popping right back up. Going to be probably about $8 a share or above soon. So what the heck is going on here? Because we've been trading AMC or watching AMC trade basically all day today. And look at this. The trading halts have been absolutely nuts. If we're just looking at, again, 514, right? Check this out. I'm going to do a search for AMC. There's 38, but it's showing up twice, so 38 divided by 2. That's 19 halts today. Halt right here most recently, just a few minutes ago. Another halt, another halt, another halt. Like, look at this halt schedule. It's just absurd. And, I mean, if you look at the halting rules, generally halts happen because of an absurd change in price stock that's happening very rapidly, which you can kind of see that on AMC, or for some news that comes out in the middle of the day that investors might need time to react to, or sometimes there will be a trading halt, like if the entire market is selling off, like what happened around early days of COVID. There was those massive halt circuit breaker downs where the entire market was halted for a period of time. In this case, we've just got AMC halting 19 times today, GameStop as well halting 13 times today. Both of them just on a crazy halt schedule, and it leaves you to wonder what the heck is going on here. Why would they halt this over and over and over? My guess is it's blatant market manipulation. You've got Citadel, other hedge funds that are trying to CYA right now because they were not prepared for 2 days in a row of over a 100% gain, right? So if we go back here, AMC trading at $3 a share, boom, $6 a share, that's 100% gain. Surely it wouldn't do it again overnight. Boom, $12 a share, 100% gain. And what do we have at market open? The market opened with several trading halts, which immediately brings the price down to about 8.5. Dilly-dallies around, several more trading halts throughout the day. And we had a low today of $6, literally gave up all of the gains from overnight pre-market trading. And now we're moving back up into the $7 range. So what can you do to protect yourself against this kind of market manipulation right now? Well, one is you can just sit and hold if you want. That's fine. Two is if you're like, you know what, there's going to be market manipulation, there's going to be dips, and potentially CEO Adam Aaron is going to tweet out again that they're going to dilute shareholders by selling more shares on the open market to raise cash and pay off debt or whatever new excuse he's giving next time. Then what I would consider doing, and this is actually what I did this morning, is selling covered calls on your position. So I own a 100 share position of AMC, and quite frankly, I forgot that I owned this position. It was in an old Robinhood account. You can see I kind of just mess around in here for fun. So I had 100 shares of AMC, and then more recently, for a video that I was doing on how to buy covered calls, I entered this position with Spirit Airlines as an example, which is actually doing quite well. But back to this AMC. So my position in AMC is hilarious. I had an average of like $7.50 a share, 7.58 per share, and it was down 50-60%. And then with the recent rally, I was up like 30 or so, maybe 40%, maybe 50% during these peaks. And what I did is I was like, you know what? I don't really buy into the long-term short squeeze up to $1,000 per share thesis that a lot of people are or sometimes hype and rallying and trying to get more people to buy in at. But what I do think is that the options premium, actually what I do know is the options premium was crazy juiced this morning. So I'll show you what I did down here. Is I sold a call 12.5 for $320, and this expired in 3 days. And my plan was just to let it expire worthless, or to get exercised at 12.5 bucks a share and just make a nice profit on my trade and gain an extra $300 in premium here. But what ended up happening is AMC sold off like mad for basically all of today. So when I finally came back to look at my position, I was like, oh my gosh, I can buy that back for 70 bucks already. So I bought it back for $70, which released the collateral, right? My AMC shares are no longer collateralized, but I made $250 here. Another way to think about that is I gave myself $250 of downside protection. So this is what I would do. This is what I'm planning on doing. I'm not recommending this to anybody. Do your own research, whatever, financial disclosures I need to give. This is just for entertainment, education purposes only. But what I'm looking at doing is every time there's a big pop on AMC over the next several days, I'm going to be selling a very short dated cover call. And then anytime there's a big dip, I'm going to be buying it back for a profit. And I'm going to do that over and over again until I've made a very healthy profit. And I mean, my position was kind of subpar. Imagine if you had an average of like $3 a share because you just started buying into AMC recently. So your average was like $3 a share. Well, if you sold that call at $330, right, and you let it, or $320, and you let it expire worthless, well, now your position is totally risk-free because you've made 100% of your money back in selling this covered call. And I didn't even get the best fill. If I look at the best fill, where's the 12.5s here? Here they are. I'll look at this. AMC's halted again. You can tell it's halted because this whole option chain goes gray, meaning there's no trading happening on it right now. So look at this. If I had been paying attention earlier this morning, which, so sad, boo-hoo, I wasn't, but I could have gotten filled upwards to $500 on this, somewhere between $400 and $500. I still got a great fill, I think. I sold again $320, so right here I was in the high point. And then I bought back, again, like $70. So I could have gotten a little bit better of a fill in my buyback, but whatever. And now what I've got set is I've got another sell order for that same call for $300. So if the price of AMC moves back up before the end of the day, that's going to fill, and I'll sell that covered call again for $300, and I'll look for another dip to buy it back on, or let it expire worthless, or let it exercise. And if it gets exercised, great, I'm happy with that profit. Now let's say you're in GameStop instead of AMC. Same principle applies here, right? So let's just look at GameStop here. Looks like GameStop's just unhalted, so hopefully we get some options data. The GameStop option chain is nuts. And this, to me, is one of the other signs of blatant market manipulation, is if you look at the price of some of these... Actually, it's evened out a little bit. Earlier, it didn't matter how far out of the money you were. Every single one of these on the ask was $1,000. It was just straight down the line, 1,000, 1,000, 1,000, 1,000, all the way down the line. They just didn't... Oh, look at this. The option chain is opened all the way up to... You can get call 100s now, and there's volume on those. That's quite remarkable. Anyway, what I'd look at doing, like, let's say you're a GameStop holder like I am, and let's say, unlike me, you hadn't sold a covered call yet. What I did is I bought here at about $13 a share, and that same day I sold a call 16. So I'm actually buried deep in the money on that call. I'll show you my position right now, actually. Here's my position. So I sold this for like $200. I could buy it back right now, and actually I'm considering doing it. What I could do is I could buy this back for $2,800. But what I would do at the same time is I'd look at rolling it. So this is a call 16, and I could get that for $2,800. But look at this. If I wanted to, let's find something around $2,800. Oh, you know what? There's not really any room there. I'd have to go super far out into the future if I wanted to do this. No, doesn't even work there. So I'm just stuck in the position, call 16. I could buy it back at a loss if I wanted to, and hope that GME rallies even further. But I'm just going to let it exercise. I'll make a $500 profit from the premium gained plus the gain from 13 to 16 per share, and I'm happy with that. If I hadn't already sold it, though, I bought in at $13 a share. This is what I would be doing right now. I'd be looking at the shortest dated contracts. I'd be going up here, and I'd be saying, okay, if I sell, if I wanted to 100% de-risk my position, I could sell this right here, right? Or I could push out, let's push out 30 days, and I could almost 100% de-risk my, I could 100% de-risk my position. Look at this. I could sell a call 45 for 1,300 bucks. I could probably actually ask for a fill at 14. I'll bet I get filled. 100% de-risk my position. And then, yes, I'd be forced to sell my shares at $45 a share. So, you know, if GameStop moons, whatever. But if it doesn't, if it just pitters around for a bit, or if it falls back because of manipulation or whatever other reason, well, the great thing is my position is 100% de-risked. So that's what I would be looking at doing. That's what I am doing, is I'm looking at ways to de-risk my positions. My GameStop position doesn't really count because I've already locked up those shares with a covered call, and it's very likely that that will just be exercised. You know, maybe 2 weeks from now, 3 weeks from now, enough premium will have drained out of this that I can find a better roll, and I can roll it forward if I want. But as of right now, I'm counting that as exercised. AMC, though, I'm really liking what's happening with AMC, and I'm going to look for another spike back up to $10, sell some more calls at that point. If we don't get it, maybe I'll start selling at, $9, $8 range, but I would guess this meme rally is not over. Now, does that mean you should buy in right now if you haven't already? I'm not going to say one way or the other. All I'm going to say is use appropriate risk mitigation strategies. I think covered calls is a phenomenal way to do that right now. Like if you wanted to buy 100 shares of AMC today, right now, you could get it for about 700 bucks. And then let's just move out 31 days. You could say, okay, look at these. Look at these contracts right here. You could do it. You could sell a call 10. You could do a call 12 for 175 bucks. So you'd be going from $7 to $12 if you get exercised. That's $500 in profit on a $700 position, plus another, you could probably get filled at $200 here, and then that'd be 100% gain in 31 days. The nice thing about this too is this protects you $200 to the downside. So if AMC happens to move back down to $5 a share, which it very well could, well, in that case, you've protected yourself against that downside, and if it does, then when it's at $5 a share and your position's expired worthless, you can just sell some more covered calls. The nice thing about this is, again, it de-risks your position, and it gets rid of that, I guess it would be the opposite of FOMO. FOMO being be afraid of missing out, but like the fear of losing all of your gains and becoming a bag holder, right? If I have 100% de-risked my position by selling premium and letting that premium expire worthless, now I can be a true diamond hands, literally hold forever, because I've recovered my entire cost on AMC or GME. So that's what I'm looking at doing. I may even buy another 100 shares of AMC at these prices and do, you know what? Should we just do it right now? How much buying power do I have? I think I only have like $300 of buying power. Maybe I'll deposit some more to this. All right, let's do it. All right, pause so you couldn't see my bank details there, but I just deposited 500 bucks, and we now have buying power of enough money to buy 100 shares. So I'm going to go here. I'm going to review this order. We're going to put in a buy order for 100 shares. Got filled at $6.87 per share. And right now, I'm just going to go here, AMC options. I'm going to sell. I'm going to move this to about 30 days out. And I'm going to sell. I really liked that position right here. Look at that. This is just nuts. This is nuts. I can get 175 here. I'm going to see if I can get it for 200. I'm going to see if I can fill this for 200. Let's see if that fills. Not filling, not filling, not filling. Okay, we're going to replace the order. Let's see if we can get filled for, let's go like, I don't know, like 1.9. We'll see if we can fill at 1.9. Still not filled. Oops, I gotta, oh crap, how do I get back to that? I forget how I get back to that. Let's see. There it is. Okay, so I just had to go back to my AMC page, go to stuff, and it's here. When I hit show more, it's here in pending. So let's cancel and replace, and I'm just going to let it fill at 175. I think 175 is a plenty fair price for it. Oh, would you look at that, though? Did something happen in the meantime? No, it's still there. Why is this showing $100, though? All right, hang on. Let's find my... Oh, because I'm 3 days. Let's go 30, not 38. We'll go 31. 31 days. I want to sell this covered call. You know, I could go 12.5 for 170. I think that's actually better. Because that gives me another 50 bucks. Although it's still showing... Did it fill? It's showing a -1 there as if it filled. Did it fill before I could cancel? It doesn't look like it filled. Hang on. Here we go. Show more in history. Oh, it looks like it filled. Yeah, oh, that's so funny. Okay, so it filled at 190 bucks. So what I did here, look at this. We'll just look. So I bought 100 shares at 6.87. So we're going to go 6.87. And then this filled at 1.9 per share, so minus 1.9, right? So AMC could literally go down to 5.07 and I'm break even. And if I'm looking at AMC from a technical perspective, I'm pretty dang confident that it, you know, I can break even on this at minimum, right? If you look at this, like here's the history of AMC for the last several months. Here's $5 right here. I'll add a new line on my chart right there at $5 or so. That's not too shabby. I'll bet you I break even, or I even make money on that. Now, do I get exercised? If I get exercised, I'm happy too, because I make 100% gain in 30 days. That's phenomenal. And if I don't get exercised, let's say the price just kind of pitters around 30 days from now, I sell another covered call. I do it 2 or 3 more times, and then I've got a really nice position built where I've completely de-risked my AMC position. So that's how I'm playing it. I'd love to hear how you guys are playing it. If you're just diamond handsing the whole thing and saying ride or die, YOLO it all, cool. The options chains are just nuts for buying options right now. That's why I'm doing what I can to be an option seller. I mean, you could look at, I mean, gosh, let's see how crazy the premium gets out here. You know, not that much crazier actually. It's not that much crazier. So I wouldn't look at going out more than 30 days. 30 days in premium, even these 10 days, like look at this, 10 days, 12 and a half, you're getting $140, $150, $160. That's just crazy talk right here. So I like this. I'll update you guys as time goes on if anything changes, but here's how we're playing AMC. Let me know how you're doing it. If you haven't hit that subscribe, catch you next time.